All right, so a bit of a snafu for the first 15 minutes. I just like talking to myself. Well, I like talking to the camera when no one can actually hear me. Just something I like to do on Wednesdays. Anyway, it is Wednesday, the 21st of October. I'm Kevin Murcko. This is This Week in Crypto. So I'm going to usually I take 5 news stories from last week or this week, ending today, obviously, I guess between this week and last week. And I just give a quick reflection on each one. If something's getting talked about that really kind of triggers me a bit, like Binance, for example, I usually take longer than a minute, but generally 1 minute on each news story or a bit longer. Usually within 10 to 15 minutes, we knock it out. This week, we have 2 weeks to go over. We have last week and this week. So the week of the 14th and the week of the 21st. I'm going to start with the week of the 14th. We'll go through those 5 news stories, and then I'll come on to the week of the 21st. We'll go through those 5 as well. If there's a bit of time left over on the clock, roughly 30 minutes or so, I'll jump in and answer some questions. So you can always ask some questions related to the news or not related to the news. Up to you. So yeah, let's get moving now that everybody can hear me, which might be a good or bad thing. We'll figure that out in the next 10 or 15 minutes. So from the week of October the 14th, 1 on a list of 5, Binance UK director departing after less than 6 months. So this is kind of unique because I know who the Binance UK director is, friend of a friend. In fact, when he took the gig, I told him it was a bad idea. I guess he should have listened to me. I don't know exactly why they've left. I'm not even going to read the story because it probably doesn't say, to be fair. I have 2 plausible explanations for this. So one, obviously Binance started to do this kind of franchise model where they were going out and opening up regulated fronts, basically owned and operated by other people using the Binance name, kind of like franchises or satellite offices, but basically with front men and women that were getting licenses and running those exchanges using the Binance name. I think the idea there initially was they wanted potentially maybe to try and get fiat on and off ramps, but also when Binance runs into issues, they would have a way to save the Binance name and potentially protect some of the value of the Binance name by still operating all these fronts. And also, there's no direct connection really back to the parent Binance, which is a good thing, at least from risk mitigation perspective. At the end of the day, though, potentially either they now think that's a bad strategy because obviously if you look at they just closed Binance Jersey. If you look at the volumes that they've been able to get, they're nothing compared to what Binance does via the Binance.com, via the property. I mean, absolutely not even close. And Binance UK, potentially they had an issue getting the license because they had the Binance name. That's one possibility. The other one is potentially after what happened with BitMEX, and the UK director now having a bit of insight into how Binance is operating and what's happening. Potentially, he's seen some of those red letters get sent to Binance as well and didn't want to be attached to that brand. That's also a plausible explanation. I don't know which one it is. I may find out in the future. If I do, I might not be able to tell you guys. I don't know. But if I can tell you, I will. It's an interesting one for me because I didn't know about it. And something that I thought I would have known about, to be fair. Number 2 on a list of 5 from the week of the 14th, Grayscale's Ethereum Trust attains SEC reporting company status. This is my who fucking cares for this week, WFC. In that, Grayscale, I guess at this point, I don't know how much they have in their Ethereum side, but they have like 3 billion overall, roughly, I think, in terms of crypto assets. All they do is buy and hold, which, is very difficult to do. Sarcastic pause. So all they do is buy and hold, but they have about 3 billion in assets. Most trusts or funds, when they grow to a certain size, end up doing their own reporting because doing it through a secondary reporting company costs money. And it takes time, and you have to share details with that reporting company. Maybe you don't want to share. So it kind of makes sense, and most funds, as they scale, do it themselves. They're doing it themselves. Great. Number 3 on the list of 5, Bitcoin was once again rejected by the Bank of England. So I tried to brief through the story when I first did this and was talking to myself for 15 minutes. I thought maybe it was about an ETF. I thought maybe it was about some type of regulatory ruling. Basically, it's just the governor of the Bank of England kind of shitting on Bitcoin, saying that it only has value because people it only has value because certain people trust in it. But that's exactly why fiat money has a value. That's exactly why any money has a value. Even money backed by gold. You have to have faith that their gold is actually in the depository to back the money. And you have to have faith that if the balance ever came due on that paper bill, it would be covered by the gold. So even in that case, to be honest, it's only really worth what somebody's willing to say it's worth. Bitcoin obviously has a more fluctuating market rate. And to be honest, year on year, it's only gone up. Well, maybe not year on year at this point, because, well, depending on when we hit 20,000, but generally over time, it's only gone up. It's been on a upward trajectory since its inception. Can't really say that about the US dollar, the euro, the pound, et cetera. So I think, yeah, I think there's been a lot of pressure now with CBDCs and getting into crypto. There's been more and more pressure on central banks to adopt the technology. And many people in the industry feel that that means they should be adopting Bitcoin or adopting one specific asset. I don't really see why that's the case. I think the fact just getting CBDCs and getting them into the hands of people potentially could solve lots of issues. There's a million reasons why that's going to take a long time. But at the end of the day, I think the Bank of England shitting on Bitcoin, I mean, what is it? I mean, that's just any other Wednesday, right? I mean, is that really newsworthy? Number 4 on the list of 5 from last week, the week of the 14th, US, UK again request government access to encrypted data. So yeah, here we have, it's not just the UK, US, an agreement between about 6 or 7 different countries, some Commonwealth countries, as well as the UK and the US. So Canada, Australia, New Zealand, et cetera, somewhere in there, have asked tech companies that do end-to-end encryption to give them backdoors. Things like WhatsApp, things like Signal, Telegram, where they can get access to that information. I guess we all know at this point, we live in an age, and the funny thing is crypto itself, even though that initial Bitcoin white paper talked a lot about separating from banking system and separating from centralized government and all the power and centralized power, the fact is that the governments are coming around to crypto and blockchain because of the fact that it's auditable and traceable. And that means that they can trace everything you do, even when you spend cash. And that's probably not what Satoshi Nakamoto had in mind when he initially pushed out this system. So privacy, as we all know, dwindles over time. It has been dwindling in modern government. Every time there's a crisis, they use some way, shape, or form to take our privacy away. Even with COVID, man. Ask people in Asia and China about how much privacy they have on where they go and what restaurant they eat at. And they get tracked everywhere they go. Because they're trying to protect them and save them from, dying of COVID. At the same time, though, they did lose a bit of privacy because of that crisis. And that always happens. It's kind of, at some point, maybe there's going to be some big, huge global revolution and it'll stop happening. But it still happens. This is not really that newsworthy because obviously these governments want access to that information. The question is, will tech bend over backwards and give it to them? The bigger the tech company, the more they have to lose, the more probable they will. But they'll lie about it for sure. Rest assured, they will lie to your face about it, and it'll come out in some Senate hearing or some parliamentary hearing a couple years from now that they actually gave out all your information, and everybody will be pissed off for a day and a half. And at dinner time, everybody will tell their kids and their grandparents or whatever that how pissed they are, and Facebook's a piece of shit, and Twitter sucks, and I don't know what. But at the same time, 5 minutes later, they'll be checking their Twitter feed, checking their Instagram, and sending some stupid video on TikTok. So there you go. Number 5 on a list of 5, crypto community in India calls for regulatory sandbox. Awesome. India, if you're listening and you need some help with that regulatory sandbox, at Kevin Murcko. So go ahead and tweet me or send me something on Telegram, or email me. Not at Kevin Murcko, but I'm sure you'll figure it out. Look, regulatory sandbox are great, especially for places like India where they flip-flop between yes, no, crypto ban, no crypto ban, yes, crypto ban, no crypto ban. It makes sense that they set up some type of regulatory environment where things can be tested and they can eventually either decide, not just based on innuendo and third party and hearsay, but actually based on what's happening in India under a regulatory umbrella, whether they want to move forward or not. It's a great idea. They should do it. There's no reason why they shouldn't. From the 21st now, 1 on a list of 5, Fidelity Digital Assets touts Bitcoin credentials as publicly traded companies now hold over 600,000 BTC. I know a lot of people on crypto Twitter are focusing on this. I've seen Pompliano and a few other people talking about it like it's the best thing since sliced bread. And I know sometimes I'm like Mr. Doom here a little bit, but you know why why companies are putting money into Bitcoin? You think it's because they really like Bitcoin, or it's really because, first of all, as far as what the effect on price, they're probably not buying Bitcoin from Binance or any other exchange for that matter. They're probably buying from a very large pool of Bitcoin that will happen via some direct OTC deal, which won't affect market price. And it was probably already locked out of circulating supply for the most part, because it was either sat in some other book somewhere that wasn't necessarily active. So I don't think most of these are playing a big role in price, aside from FOMO and hype, which, let's be fair, is what runs this market anyway. So in the short term, yes, it can have an effect on price. Long term, I don't know so much, to be fair. On the side of that, you're about to go into one of the craziest election cycles the modern world has ever seen. And whether you live in the US, know someone who lives there, or just simply don't give a shit about politics in general, this US election will affect many, many things in many, many countries around the world. No matter where you live, you will be directly or indirectly affected by what happens in that election, whether that be because of regulatory, whether it be because of legislative, whether it be because of simply political issues, whether it be because of economy, whether it because you will probably be affected in some way, shape, or form. And I think running into that type of uncertainty, you usually have some of your assets in something that you believe won't correlate to the rest of the market. Now, a lot of institutions believe that Bitcoin eventually will be a non-correlative asset, and at some point in its past, it has been, even though it has been correlating as well to equities. But they believe that it won't be. And so, name me another asset outside of Bitcoin that potentially can hold some value, potentially can rise in price, and is non-correlated. Well, I'll give you the answer: there isn't one. So it's not because they love crypto, it's not because they love Bitcoin, and it's not because they hate altcoins. It's simply there's liquidity in Bitcoin, it is an asset, it's fairly easy to get into, they can diversify, and they believe it to be non-correlative going into a ridiculous election cycle. That's the reason. Number 2 on a list of 5 from this week, Crypto.com slashes staking rewards as users top 5 million. There was this guy, this bald crypto exchange CEO at one point, can't remember his name, was talking about how this would happen, how eventually demand for the interest would outpace demand for the credit. Who was that guy? Oh yeah, that was me. I'm not trying to be a bit glib here, but the DeFi market and the interest rates that are paid both in DeFi and both in staking are absolute horseshit. All right. The reason why the rates were that high is because there were more people seeking the credit than seeking the interest. That's it. You had a very small amount of people that understood what was happening. When you start to get people that, somebody goes up to their friend Bob and says, Bob, hey Bob, I got one of these Stabal coins and I'm making like 12% interest on my dollars. And then this other guy goes, oh yeah, 12%, eh? Oh well. That's amazing. On a Stabal coin, you say? Oh, what's a Stabal coin? And then, some random nonsense bullshit conversation happens between these two fellas. And now that starts to go to every Paul, Mary, Henry, whatever on the street. And now there's so much pent up demand to get 12%. But guess what? How do you make the 12%? Probably margin trading, probably collateralized loans. What happens when the demand for the interest outpaces the demand for the credit? Well, the interest rate drops. There you go. It was bound to happen. It happened pretty fast, and I would expect it to happen across the board. Eventually, if you start to see really large ROIs, it's bullshit, because there's no real market as it scales that can support those ROIs. It's not because traditional markets are, shady or greedy, and they are pretty greedy, but it isn't that. It's simply that there is no way to support those type of interest rates, especially at scale. Now, number 3 on a list of 5 from this week, Chinese police investigation halts withdrawals at crypto exchange OKX. So I read a few rumors about this initially, like the guy was arrested, the guy just ran off, they couldn't just get a hold of the guy, maybe he was dead, I don't know. And it looks like the arrested by police is the one that seems to be the one that's actually accurate. My question here is, if they arrested him for money laundering or suspicion of, and he goes through a court process, they may not allow access to clients for their money for years. I've mentioned this a few times, that the reason why, we're as stringent as we are with AML, with KYC, making sure things are done right, making sure that the regulation's in place, is because if this happens to a crypto exchange, well, the government needs to investigate. They're not fast. I guess if you would pick any word to describe government, fast would probably not be the one you'd pick. In fact, it might be the last one you picked, because they're not fast, they're slow. And so what happens is those investigations take years. And at that, they can't release funds. They go into liquidation. And when you go into liquidation, you get receivership. And when you go through receivership, it takes years. I'm literally part of a receivership case from my FX business, from a company that was called Boston Financial, I forget that. I even forget the name at this point, but it was a prime brokerage based in Boston in the US. They went out of business. And I still don't have any money back from the funds that were held. That was, I don't know, 7-8 years ago. So yeah, get in line. So hopefully that's not what happens here, but it could. Number 4 on the list of 5, the Great Financial Reset. IMF Managing Director calls for a new Bretton Woods moment. So what I'd say to the IMF Managing Director here is, how would you possibly put fiat back to a gold standard when neither country, any country really that deals with the IMF, has enough gold backing to support the current amount of currency in circulation, especially after a disaster like COVID? So the gold standard sounds nice and bubbly to people that don't really want to dig in and go into the woods, literally, and figure out why we're not on that standard anymore. That doesn't mean what we're doing now is better in every way, but it's scalable. It's scalable, especially in times of crisis. Again, I'm not saying it's better, but there's no way to just reverse that and go back into a gold standard. There's simply not enough gold owned. You would literally have to back it to gold that's never been mined yet. And then you'd have to figure out who actually has ownership of that gold to be able to produce currency on the back of it. Good luck with that. Get back to me in 40 years when everybody shoots each other at the board table, at the meeting table during those talks. Number 5 on the list of 5 from this week: chasing the hottest trends in crypto. The EU works to rein in stablecoins and DeFi. Look, I think the EU is trying its best to. I'm gonna look at the story because I want to see exactly what they're because I know what's actually happening. I'm not sure. Okay, so talking about the UK banning derivatives as of January, derivatives trading. There's a big loophole there, though. There's a precedent set back in 1999, City Credit Index, which depending on how you structure your product, can still fly under the radar, even though with this FCA ban, as far as it looks right now. That might not actually be what happens in the end, but it looks that way. So I would say, stable coins can be, they do say they're a threat to stability. Look, in reality, it very well could be. That's why the Facebook thing the Libra thing was so kind of kicked around. Basically, you have 2 billion users that all of a sudden have access to their own currency. That would be the biggest populace in the world. You now have the biggest populace in the world, located around the world, being able to transact in currencies that don't actually tie back to the government, that they may not have oversight over. And literally, it could devalue, especially small currencies. It might not devalue the dollar or the euro, but imagine smaller currencies, even in Europe, European currencies like the Polish zloty or the Swedish krona or whatever. All those currencies could easily get devalued because you're talking about smaller currencies that are hard to move globally when you compare them to other currencies versus now one currency 2 billion people are using. So those fears are actually they're pretty well founded. However, the only reason that happened is because Facebook structured their Libra offering initially like a central bank. And they've kind of scaled that back in Libra too to make it more like a stable coin, like we know of what a stable coin is, in terms of that it's probably backed by a fiat currency in some safe somewhere or in some bank account, but it can fluctuate with the market. And yeah, you can buy it and sell it on different exchanges. That definition is much less of a threat than a Facebook Libra. So that brings us to the end here of the news, I believe. So I'll jump in here and see. Yeah. By the way, guys, if you're watching, please thumbs up, give it a heart, give it a shake, give it a punch. I don't know what the hell you got to do. Make sure that we know that you like what you're watching, or comment if you don't like it, I guess. I mean, I'll probably respond to your comment, but would appreciate it. It definitely helps us out. It helps us make more content. We got some cool live webinars coming up. I think in the coming weeks here that are going to add a little bit more spice to our content. So we hope you guys will be around to watch those. I see a question here. I'll tend to it real quick. If bank want to go cryptocurrency, how's CM going to compete? Banks are very bad at executing product, right? Banks offer insurance. Do you have your insurance with your bank? Banks offer safeguarding and custody of assets. Do you have a safe deposit box at your bank? Banks generally offer credit card services. Do you have not only your banking, but all your credit cards at the same bank? Banks generally offer automobile insurance. Do you have your automobile insurance? They offer home insurance. They offer medical insurance. Do you have all those things through the same bank? No, because they're fucking horrible at selling them. In fact, and they usually have really shitty infrastructure. So I think, the fact that banks would offer cryptocurrency, all that's going to do is make people more aware of what cryptocurrency is. That may mean that instead of the Coinbases of the world and maybe the CoinMetros of being the first stop for someone to learn about crypto and get their first Bitcoin or get their first 1/100th of a Bitcoin or whatever, they may end up doing that through their local bank. But just like most banking services, it's probably going to be overpriced. They're probably going to have bad customer support. And eventually, once someone knows about cryptocurrency, they're going to want to buy some more. And that's when they start to research. And that's when they end up at privately owned businesses. Just like what happens now with a multitude of services that banks offer. Banks are even bad at offering deposit accounts. That's why challenger banks exist. That's why Revolut has 8 million clients. Not because there's, how are you going to compete with a bank? They already do that. Yeah, but they don't do it very well. Banks are bloated. Banks spend a lot of money. Banks burn a lot of money. Banks make a lot of money. But generally, they don't make those off of retail clients. They don't generally care about retail clients for the most part. They make money elsewhere. So them having access to cryptocurrency, I only see as a positive. I see no negative there for our business model, to be fair. Another question from Links Lead. So what would you recommend doing in this election cycle? Sell everything and buy back if maybe everything crashes? I would not be in the market around election day unless you are a seasoned professional that knows how to manage risk. I made a lot of money on the election day 2000 when Bush versus Gore. In fact, for about I was a few hours when they kept flip-flopping between who was going to win. Literally, there was announcements for one side to win, then an announcement for another side to win. I was shorting and longing the dollar against about 15 different currency pairs, and made a ton of money. But at times, my balance was going. I mean, it was. If you think crypto is volatile, this might have made you puke. So it was. You don't want to get involved in that type of trading around elections unless you really know what you're doing, or you have no problem losing everything you have that's sitting in crypto. I would say that doesn't mean Bitcoin in general. I don't think Bitcoin's going to go to 1K and then bounce to 30 and then bounce back down to 1. I don't expect that. What I do expect is major volatility. I would be sitting on my hands. If you're in Bitcoin, you can stay in Bitcoin. I mean, if you've been in it for time, you've already been at the 3,000 lows and the 20,000 highs. This isn't going to probably knock you out of that seat. It's not going to knock you out of your hodl seat. But I wouldn't be day trading during the election. November 3rd, I would literally sit on my hands until they fell asleep to make sure that I couldn't press a button and FOMO myself into the market. That's what I would do. If you're talking about maybe just short-term diversification of a portfolio, I would go to cash with some of that asset. You would assume that for a U.S. election, lots of bad news, that USD might get hurt. But as you saw with COVID, the flight to cash used to happen with Japanese yen and Swedish and Swiss francs. Japanese yen for years was the carry trade. That's where everybody went when they went to cash, because since Japan had literally 0% interest rates for 25, 30 years now, however long it's been, it pretty much maintained. It was a great place to maintain assets while you were trying to figure out what to do with them. That's ended though. The carry trade is pretty much dead, and the Swiss franc, after depegging from the euro, nobody goes there either. So in reality, it's the dollar. That's where everybody flies when they want to go back to cash. I would expect the dollar to do quite well between November and January. That doesn't mean it'll do well every day between November and January. But I would expect it to hold its own. So stable coins might be an option if you want to pull some out of the crypto market, if you want to take some profit. Understand that if the Democrats do win the election, there's probably going to be massive profit taking leading up into January when the Democrats take office, because it's expected that all the regulation that was rolled back on the Trump side will be rolled back in. And when that happens, it's going to be a severe blow to wealth managers and other, and they may not be ready for it, which means they're probably going to take profit. So that means you may see actually an exuberant market right up until December when you start to see sell-offs. It's been pretty quiet in TG last week. Any biz dev news? We actually have some biz dev news, but it's going to be announced next week. We have a specific show where we're going to announce it. So I'm going to keep a tight lip on that one. Plus, we've been kind of getting lambasted on Telegram about, again, this transparency versus not so much transparency. Transparency meaning you get news every time we get news, which, if you ask a company about deadlines and they give you their internal deadlines, they will change 1,000 times before they actually have. But then most companies, let's say Windows is coming out with a new Windows, right? They're going to come out with Windows 2021 or something. They say internally, that's going to be ready on Saturday. Then it's ready 3 weeks later. Then it's 4 weeks after that. Then it's 5 weeks. Then it's 7 weeks. Then they finally get it ready. And then they wait a whole month to make sure it's absolutely ready. And then they go outside and say, oh, by the way, guys, we have a date now. And then they hit that date and everybody goes, awesome. They hit the date. Not really, though. What we have been doing up to this point is a bit different. We share everything in turn. We are 100% transparent, even to the point where it's maybe not a good idea. And so then we get lambasted for not hitting certain dates or saying soon or next week or whatever, because a provider changes something, because something else happens out of our out of our control. But at the same time, when we don't, for the last couple of days, we've had people complaining that there's not enough updates. So you can't have it both ways, guys. What I would say, yeah, so there is some very important biz dev news actually that's coming up, but I'm going to save it for next week to announce during one of our upcoming webinars. Yeah, these are actually our physical coins. So a little bigger than, they're not exactly life size, slightly smaller. Yeah, okay, I just threw this up there. I figured it would look cool. I don't know. It's been pretty okay. You mentioned U.S. stock market. Let me throw this up on the screen. You mentioned U.S. stock market is not good investment anymore, but most U.S. stocks have been rising recently. CM can raise money by listing in U.S. stock. Why CM would not want to be listed in NASDAQ? It's not, well, first of all, it's not because we wouldn't want to be listed in NASDAQ. To get listed in NASDAQ, first of all, our market cap would have to be about 100 times at least what it is currently, minimum. That would also mean that a substantial amount of money would need to be put together to be able to even go through the process to get listed. It's not like you just wake up and go, I would like to be listed on NASDAQ, please. And NASDAQ goes, sure, Kevin, here you go. That's not how it works. So it's not, and when I say, I don't know if I ever mentioned that the stocks aren't a good investment. The point is here, there's been a ton of government money being pumped into stocks. That's going to stop at some point. The stock market has been fictitious forever. It's always been fictitious. They're always, the stock market value is always based on multipliers and not actual revenue. It's multipliers of revenue. It's fictitious numbers. It's a lot of faith, a lot of hype. Similar to crypto. That's how equities markets tend to function. So for me, I would rather not buy into that hype. I would rather have something that I have a bit more control of my money over. That's why I usually invest in things I'm a part of. But yeah, it's not that we wouldn't. It's simply, yeah, thanks. Actually, I don't know if you guys seen this one. This is a new one. This is so I don't even know if I can raise this. So it's just new shirt there. But yeah, I had a university lecture before I got back to the office today, so I had to shave and look decent because yesterday I looked like a fucking caveman. So today I had to fix myself up a bit. All right, guys. I guess we'll call it a show there. Tag me on Telegram at Kevin Murcko. Tweet me on Twitter at Kevin Murcko. If you have questions about anything, about crypto in general, about CoinMetro, about whatever, hit me up. On Friday, we'll have the AMA as usual. So make sure you join for that. That's 3 p.m. Estonia time. What is that? It's noon UTC on Friday. So I'll be here for that. Get your questions ready. It'll be live as always. We have a really cool webinar series coming up next week. Obviously, the bond is getting closer and closer. USD is right around the corner. So lots of things to talk about. You'll be seeing more and more news about that as we move forward. Thank you for coming. Sorry for not being here for a couple weeks. I'll hopefully get here. I'll hopefully now make this a clear thing every Wednesday. But anyway, this was This Week in Crypto. These last 2 weeks in crypto. And I'm Kevin Murcko, CEO at CoinMetro. Thanks, everybody. Cheers.